Question 1. U.S. farmers have become concerned that the future supply of wheat production will exceed demand. Any hedging activity to sell forward would most likely protect against which market condition? A. Contango. B. Full carry. C. Backwardation. When a commodity market is in backwardation, the futures price is below the spot price because market participants believe the spot price will be lower in the future. When futures prices are above spot prices, the market is said to be in contango. C is correct. Question 2. Relative to traditional investments, alternative investments are best characterized as having A. Greater liquidity. B. Higher correlations. C. More unique legal and tax considerations. Alternative investments are more likely characterized as having unique legal and tax considerations because of the broad range and complexity of the investments. The answer is C. Question 3. Adding alternative investments to a portfolio of traditional investments will most likely result in a new combined portfolio with returns and standard deviation that are respectively the risk-return profile of the overall portfolio will potentially improve, the overall risk will most likely drop, and the overall return will most likely rise. B is correct. Question 4. For a hedge fund investor, a benefit of investing in a fund of funds is least likely the A. Multi-layered fee structure, B. Higher level of due diligence expertise, C. Ability to negotiate better redemption terms. Funds of funds typically have a multi-layered fee structure that may dilute the returns to the investor. The answer is A. Question 5. Which attributes would a private equity firm most likely consider when deciding if a company is particularly attractive as a leveraged buyout target? A. Sustainable cash flow. B. Efficiently managed companies. C. Market value exceeds intrinsic value. Private equity firms look for companies with strong cash flow and that have a significant amount of physical assets. These physical assets can be used as security and borrowed against. A is correct. Question 6. High water marks are typically used when calculating the incentive fee on hedge funds. They are most likely used by clients to A. Avoid prime brokerage fees, B. Claw back the management fees, C. Prevent paying twice for the same performance. High water marks prevent clients from paying twice for the same performance. When a hedge fund's value drops, the manager will not receive an incentive fee until the value of the fund returns back to its previous level. C is correct.